What's up, y'all? It's your girl, Mercy. I also go by Have Mercy Trades. Today I'm going to be talking about what to look for when trading opening bell. So, the first thing is you want to have all your confluences written out so you know which way of the market you're leaning towards, right? You want to have a bias before you even think about trading opening bell because it can be super volatile. All right, so let's start with our confluences. For the sake of this call, I'm just going to stay on one time frame. I can already see that price is failing to swing lower. And I like to label the time frame that I find things on, even though I'm sticking to one time frame. Typically, I scale down time frames starting from the daily, going no lower than the 15 minutes. So I'm going to stay there. All right, I'm just going to stay on the 30 today. All right, so I see I have price failing to swing, and I also have some buy stop liquidity at the top. All right. And what I like to do anytime before opening bell, I jot down what I find. So I've got BSL above price. I've got price failing to swing lower. All right. I like to jot all these things down. You have to do this before opening bell because it's going to make deciding what your bias is so much easier. And then if things switch up on you, you have it right there. You have exactly what other confluences you have. All right. So I also see that we have sellers being stopped three or more times in this area, right? So sell stop liquidity lets us know that we have liquidity that resides below, which lets us know price may be drawn into that area. And buy stop liquidity is an area where buyers are being stopped multiple times, letting us know liquidity resides above and price may be drawn into that area. So when you have buy stop liquidity, the only way liquidity can be taken is if price closes above it. For sell stop liquidity, the only way the liquidity can be taken is if price closes below it. So sell stop liquidity is a confluence for sells. Buy stop liquidity, a confluence for buys. All right. So I'm going to go ahead and write that confluence. What I do is I make another box and I section one for buys and one for sells so I don't get confused. Okay. I also see I have a strong impulsive move to the upside of the market that is in balance that can only be filled with sellers. So when you have a strong impulsive move to the upside of the market, that can only be filled with sellers. A strong impulsive move is going to be an impulsive candle with little to no wicks involved. Okay. If it has a huge wick sticking out of it, I don't count it as imbalance. So I have imbalance right here. All right. I also see I have another area where sellers are struggling to break. So I know that liquidity definitely resides below. All right. So it looks like I have equal confluences for both as of now. I also see that this is a high. This high failed to swing higher than this high. And this low is lower than this low. This high failed to swing higher than this high. And this low is lower than this low. Price is failing to swing higher and it is beginning to create lower lows and lower highs. Okay, so it looks like overall I do have more confluence for the sell. So failing, I usually put FSH or failing to swing higher. Either one works. All right, so it looks like I want to look for sells. Okay, I've got my bias. I have more confluence for sells, so I'm going to be looking for sells. Next, you want to mark up the current high of the day and the low of the day. Determine if price has been bullish or bearish so far for the day. This doesn't determine the overall bias for the day, but it does help. So now let's go ahead and let's see. This is December 17th, and it looks like December 17th started down here. Yep, December 17th started down here. So the lowest December 17th has gotten is here. I like to make that a different color. And the highest December 17th has gotten is here. All right, so now I've got my low and the high of the day. I could say so far December 17th has definitely been more bullish, but it looks like ever since it hit the high of the day, it's beginning to bring in some bears. You want to note if price is in a range, and if so, how long has it been in a range, and are you approaching the top or bottom of it? In this case, we're not in a range. So for this example, this wouldn't apply. And then you want to have an ideal entry trigger based on your bias. So if I'm looking for sells, I want to look for the most recent order block or breaker block above price. In this case, this is the last bullish candle before bearish momentum. All right, so the last bullish candle before bearish momentum. With these order blocks, you wait for price to trade into the bottom of them, rejecting the bottom of them for sell entries. Now, some things to note about opening bell is you want to make sure you practice trading this time before you do it on a live account with live funds because it can be very volatile. I also like to be more aggressive around opening bell because I know that price likes to hit an area once and sometimes it'll never come back. So I am more aggressive during opening bell. So now that I've gotten everything I need in order to trade opening bell, I've got my confluences, I have a bias, and I have an area that I'm going to look for potential entry. Now, obviously, sometimes the entries don't work out. If they don't, I wait for the next close and I adjust accordingly. All right, so we're going to keep it going. And if price rejects, boom, look at that. This is where I would get my entry. It's opening bell, so it's right on time, right? I typically take trades between opening bell, no earlier than opening bell, and no later than like 11:30 CST. All right, so that would be my entry. So let's get my entry there. My stop loss is always 50 points. Something that helps me trade opening bell and just in general is to take one less question away from myself. And that is, what is my stop loss going to be? My stop loss is always going to be 50 points. And I'm going to make my take profit the order block right below the second sell stop liquidity. All right, so this is the last up down candle before bullish momentum right below the sell stop liquidity. So that is going to be my target. Now, my take profit one is always 30 points from entry. And I just use this as like a reference. Like, okay, am I on the right track? Cool, it just hit my take profit one. My take profit two, I always take partials at TP2 and move stop loss to break even. Okay? This honestly is for my psychology. I like doing that. It helps my psychology. It helps me hold trades longer. So I've been doing that for a while now. My TP3, key areas in the market price like. So I could see that this was a breaker here. So the top of that breaker is going to be my take profit three. I see another area where this was a breaker here or an order block there. So I'm going to make that my TP4. Remember, it's just key areas in the market prices liked. Look at that. This was an order block there. That's going to be my TP5. And then I could do my TP6 here right before the order block. And I'm actually going to make it at the wick right there. And then that'll be my final take profit. All right, so let's keep this going and see what happens. All right, so TP1 was hit, TP2 was hit. So because once take profit 2 was hit, let's say I entered the trade with 4 contracts. I would secure 2 contracts at TP2, move stop loss to break even, and leave the rest running. Once price hits TP3, I move my stop loss to TP1. All right, let's see what happens. Once price hit TP4, I'd take one more contract off the trade, leave one contract running, move my stop loss to TP2. Once price hit TP5, I'm moving my stop loss to TP3. So I'm trailing it. All right. And then let's see what happens from here. Once price hit TP, it almost hit the overall target. I would have my stop loss like literally like here because I don't want to risk all that profit on the table. All right. And it looks like it would be hit, right? So overall, 145 points on this trade, all because I had the proper steps. I identified my confluences before I got an entry. I identified where my potential entry would take place so I didn't have to second guess. I had the high and the low of the day. I want to make sure that I'm never buying at the high or selling at the low, which I didn't. And then you also want to identify what your stop loss is going to be before you even enter a trade. That way, you can accept the risk before you enter the trade. All right, so I hope that helped you guys understand a little bit more of what I look for when trading opening bell. If you have any questions, feel free to comment below.